What's up, guys? This is Kurt Thomas with Coin Mastery TV, TGIF edition. Make sure you hit the subscribe button and the notification bell on our march towards 100,000 subscribers. Very exciting. And thank you all for joining me, I should say, doing daily updates, analysis, especially from the macro standpoint of what's going on in crypto. The entire goal of these videos and audio, if you're listening on the audio, is to help people like yourself make better decisions, kind of track my journey along this crypto thing, and talk about what's going on in the world. So welcome, and thank you for joining me today. What we're going to look at is Bitcoin, and specifically the one of the biggest reasons why the price is stagnating, which is the Bitcoin futures market, cash settlements, how this all works, doing a very brief overview of this and as it relates to price. Talk a little bit about some of the new exchanges that are coming out that may be implementing some new retail offerings, what's going on in the World Economic Forum in Davos, and then we're going to talk a little bit about some big hacks and our monthly reminder about hard wallets, which is, we're going to do that. We're going to always do that because operational security is really important. We'll get to that. So we're looking at Bitcoin right now, and we've been looking at the same chart. I'm on the 1 hour because it's probably the only time this week that the short term is actually kind of pertinent. And so what you see here is, I guess right now it's about 9:15 a.m. Pacific time. You could see that there on the 1 hour, there was a shift right here at 8 a.m. I guess it's right around there. I'm not sure if it's right on par here. Was when the Bitcoin futures contracts for the CME were not settled, cash settlements. The trading was stopped, meaning that the expiration date was set, and then on the 31st, the actual money from those trades will be sent out. So if you don't know what that means, the people who are trading these futures, the contracts themselves it's worth 5 Bitcoin, right? So it's almost like a 5x leveraged contract that's settled in cash and not necessarily in Bitcoin. That allows for a lot of manipulation of the price. We've seen this in gold, silver, pretty much all the precious metals starting in 2008 or so, right? When they were booming like crazy. And futures traders like to say that it tames the market. Non-futures traders like to say that it's manipulating the market. But no matter what you want to call it, there's almost two different things going on. So you could trade futures, which is all in cash, and then you also can own Bitcoin, which is in Bitcoin. And these two markets, they seemingly move together, but they're two actually independent markets that have different manipulation and independent things like that. So CME, this first round of contracts, you can see here on the CME group, which is by far the biggest futures trading platform, trading Bitcoin right now. The other was CBOE, which happened on the 17th, or it settled on the 17th. This is a much bigger one. That's why you hear a lot more people talking about this, a lot more people tweeting about this. And so it settled, or it expired today, meaning you couldn't trade that particular contract after, I believe, 8 a.m. Pacific today, which is about an hour and 20 minutes ago. And then it gets settled on the 31st. So in 5 days, that cash will actually be deployed out to anybody who did let it expire, who did not roll their contract over, or resolve it into the February contract, which you can do in futures. So when we're looking at the charts, and I'm going to go super granular here. You look at the 5 minutes, you can see the big volume spike on Bitcoin right around when that futures contract expired, meaning that seemingly right here, some people bought all the way up, and then there was a big event where maybe someone flipped some of their Bitcoin, and now you're seeing a cascade down. Potentially some people that own some of these futures are people that were waiting for these futures to go up. Maybe it's short sellers, margin sellers. I have not dug into this nearly enough to be able to determine it, and realistically, nobody knows exactly who's trading what. All you know is that this was an inflection point in time. A lot of people were waiting for this, and also thinking that when the futures contracts expired, that the price would skyrocket, because one thesis is that there's a lot of short sellers on the futures market so they can dump their Bitcoin and drive the price down. They can make up their money on the futures, and then they can buy cheap Bitcoin and drive the price way up. Because last time these futures settled on the 17th, we had a not a big bull run, but we had a bounce, right? Whereas this one, at least in the first hour and 20 minutes, does not see that bounce. That could easily change over the next 24, 48 hours, and really until the 31st comes around. I think the big takeaway is one thing we talked about the other day. There are no patterns in these markets. I mean, there's obviously technical patterns that are proven time and time again, especially as you get to longer term, right? Things like retracements or channels. There are patterns from technical analysis that happen over and over because that's how markets and human behavior work. But when it comes to news cycles and things that, hey, this happened last time, so it's probably going to happen again, it rarely works that way. In fact, the big moves usually do the opposite of what most people think, because remember, the goal of these markets is to extract as much money from the most amount of people and give it to the fewest number of people, right? Markets screw over people way more than it helps people. That's how it does it, by destroying patterns. So the big takeaway I would tell anybody, or at least that I'm taking from this, anytime you think you're going to bank on something happening that because it happened in the past, you have to be very skeptical of that, because in reality, it does not repeat itself, and you can't build trades, you can't build strategies off of repeatable cycles when it comes to making money in markets. It's almost impossible to do that. And so that's why I tend not to get too hung up on event-driven revenue. I look at more long-term stuff. I try to do buy and hold that's built on more solid fundamentals, because this stuff just rarely ends up working out. So as we look to February, and as we look to these, the dates as they start to settle right around the 23rd of February, keep this in mind. It's not that it's going to go up or down. It's just that nobody knows. And the market's going to do what the market does, and you just don't want to base your profits off of that. So when we zoom out, which is always a good thing to do, and we look at Bitcoin as the price goes and moves, this is just another bump in the road. We've got a lot of FUD coming into the ecosystem right now. We're starting to see a little bit more volume start to pick up during this kind of flattening phase. But it's just really important to realize that all of this stuff, all of the FUD, all of the futures, everything is just getting baked into the price and into the volume. And that eventually this is going to work itself out. If it has to go down to 5,000 to reconcile, to clean up the chart, it's going to do that. But at least in my opinion, I believe that crypto and Bitcoin it's going to go up again at some point. It may not be as soon as you think, or it could be next week. I don't know. But just keeping that in mind, play the long game with your big coins. It's the strategy in crypto that has the highest probability of working, in my opinion. All right. Now, along those lines, Robinhood, which is there's a coin called Robinhood, which clearly ripped off the name of Robinhood, which is a zero-fee cryptocurrency platform, right? It's an E-Trade, a Scottrade, a TD, like it's any trading platform that some people have used, Vanguard, anything that you can buy stocks with. And Robinhood came out, I don't know, a couple of years ago, and their big claim to fame was that they're zero fee. And it's important to clarify, because often when you see things that are like, oh, we're zero fee, you end up paying the fees in other ways. And I have not dug into the pricing on Bitcoin within Robinhood. But one thing you should know is the reason they offer zero fee, or at least their original investment pitch deck, was that they don't have any offices. So you know how all these banks and trading desks, they have branches. You could walk down the street and go talk to someone about setting up an account, doing a trade, or whatever. Robinhood is all online. They have offices, but they don't have branches. That's how they save the money. They don't need the fees to pay for those branches. That was That's why it's zero fee, or at least they call it. Do you end up paying more for your Bitcoin or for your crypto or for your stocks or whatever you're buying? I don't know. I haven't dug into this enough, but just realize like that's what it is. It's not some marketing ploy where you end up paying $100 more on your Bitcoin. It could be, but that's what it is. Now, this is really good because this is going to put a lot of pressure on Coinbase, right? These fiat on-ramps where you can go from US dollars or euros or whatever your fiat is into crypto. The more that we get of that, the lower the fees are going to get, the more pressure there's going to be on making the tech really a lot better. Things like SegWit, Lightning, all of this starts to work in. Robinhood obviously is not available all over the world yet. I think it's only available in a couple of states actually in the US, but it's the beginning of something. So competition is a good thing in cryptocurrency. It's going to make things not only on the demand side, right? It's going to get, hundreds of thousands of people signed up for this in a matter of minutes when they launched it. So the demand side is great, which is what most people think about when they're like, oh, this is good for crypto. But you got to realize it's also really good for the supply side, meaning the competition on the supply side, the level of entry of where people are going to put what they're going to use to get into crypto, that's going to get better and better. So that's great. I think that this is terrific. Now, the one thing that you got to be really aware of is that, as far as I can tell, and everything I've read, I've not traded anything on Robinhood. You don't own the crypto, you can just trade it. Meaning you can buy it and then you can sell it, but you don't actually own the private keys. And I'm not exactly sure how that works with whatever, like the settlement of this, but it's kind of like stocks, right? Like you can buy a stock on your Scottrade account or your E-Trade account, but you can't download the stock certificate. You know what I'm saying? So it's a little different. It's kind of a gray area when you try to apply these traditional finance markets into something like private keys, where you can actually own the coin, store it yourself, and not on a custodial site like Robinhood or Bank of America, or whatever you're using. So that's it. That gets really interesting. It adds a whole new level of operational security to Robinhood, which is pretty relevant news, which we'll talk about in a second. So they're going to release more and more coins over the next few years, or not years, months, weeks, whenever they can. But I will put that out there, is that Robinhood may have low fees. It may be easier to use. And for all I know, the security could be terrific. But if you can't own your private keys, if you don't own your private keys for your crypto, for all intents and purposes, you don't really own that crypto. And this is one of the pieces of it. Now, things like Gemini and Coinbase, they have insurance, they have FDIC, they have a lot of things to back it up. I don't know if Robinhood does, but you got to own your private keys. You have to. That's like one of the prerequisites of crypto. If you don't know how to do that, guess what your weekend homework is finding out how to download or get the crypto off the exchanges and into one of your own wallets, which we'll talk about. Now, speaking of which, we'll jump to this. CoinCheck, which is a Japanese exchange, had $723 million stolen as of this article. That may have gone up, I believe, of NEM, which is a huge, that's a big currency for certain. They had a couple of big contracts over the last few months. I can't remember, integrations. And then obviously Ripple, huge hack. And so they froze all the accounts and everything else. This is a good example of a few things. One, it's a good example of a lot of fear that can drive the prices down, right? So it's always good in these cases to see if there's a big sell-off on any particular coin or in the market that's disproportionately bigger than what this was. So if you look at there's been hacks in the past where, like the parity hack or some of these other Ethereum hacks, where like $30 million will get lost and the market cap will go down 10 billion. That's a really good buying opportunity because that makes no sense. That's completely emotionless or completely emotional. And so as you read this and as you look at the prices, as you scout any sort of buying opportunities, ask yourself, is this a fear-driven? Are people scared that's why they're selling? Or is this actually is only going down based on the lost supply in the market or whatever it may be? Okay. The bigger piece of this is you got to realize that if you cannot leave your stuff on the exchange. I mean, I don't know how much of this was in cold wallets, like how much of it was the actual exchange or how much of it was in people's wallets. But no matter what, you cannot leave your coins on the exchanges. I know how tempting it is. I know how much easier it is. I get it. But you cannot do it. You have to own your private keys in cryptocurrency. Okay? So that's that. We'll see how this all plays out. I think one other thing is that, everyone's talking about how this is bigger than Mt. Gox. Real numbers wise, yeah, I think Mt. Gox was 450 million maybe. But that was like 30% or 40% of the entire market cap, right? So that would be the equivalent of this being $220 billion in today's terms. So when you look at the real numbers, it really doesn't help. You got to look at relative numbers in terms of impact on the market. So I'm not saying this is good news by any means. I'm just saying that it's a different size than it was in 2013. Now, getting a little bit into the macro, I don't know how much of you guys are into Davos or these kind of G20 World Economic Forum summits. It's really when a lot of the top geopolitical and I should say economic and financial people get together from all the countries in the world and discuss the state of the globe, of the global financial center. And obviously cryptocurrency is one of the topics that came up, and not surprisingly, the overwhelming sentiment is that cryptocurrency is it's actually shifted from it's a BS speculative bubble, and it's starting to evolve into, oh no, it's actually a bad thing used by criminals. And these are loose terms, right? But that's really the sentiment that I'm seeing. And so from a macro standpoint, what you need to know is that 3-4 months ago, everyone was like, this is a bubble, it's going to pop, it's blah, blah, blah. And there's obviously people who are still talking about that. But the new narrative that's coming from a lot of the top people, especially the politicians, not even the bankers, they're starting to say, this is a threat to national security. This is a threat to whatever, because it's being used for illegal activities, things like drugs or weapons or whatever. And that is really, really irresponsible for them to say that without. I mean, I've listened to a lot of these testimonies, and it's clear to me that there is a motive behind what they're saying. And that is it's good in the sense that it's going to accelerate the crypto adoption. But it's bad in the sense that the regulation that may come out of that is not the regulation that is really what's going to help everybody in the long term. It's more of a fear-driven regulation, which doesn't help anyone. So I think that that's really important to keep in mind, is what's the narrative that's being talked about? Because if it's a national security narrative, this is a huge issue for our country, regulation that comes from that is going to be more negative, and then it'll work itself out. And so what you want to do about that is look at your portfolio and realize, especially with this hacking news, you have to control this stuff. You have to have it. You have to have access to it on a wallet, on a laptop, safe deposit boxes, wherever you keep your crypto. Doesn't matter. But you don't want to wake up and have some sort of regulation control your future, right? Or whatever however you want to define it. So important to keep this in mind. I would also, it's hard to do this. It's hard to think that like the ripple effect of this, no pun intended, but this is a really good way to talk to people about crypto. There's really a time where people they listen to these narratives. It gives them a story to tell. You and me, as we talk to people, and they're like, oh, I thought, well, Bitcoin's only used for drugs. You should be able to have a really good response to that and say, actually, I can show you some numbers that would show you that very, very little of this is being used for counter or illegal activities. And in fact, if you look at the fiat system, there's $600 billion being used. There's actually a much bigger thing in the current system. This can actually thwart a lot of that. So use this as a way to educate yourself so that we as a crypto community can educate the population, because it does have an impact. And when they talk to people, they're more informed and they're more educated. And the few people at the top don't get to dictate what everyone thinks. That's really like a really bad situation. And it's how we got into this mess in the first place, right? Of needing cryptocurrencies and decentralization. So keeping an eye on that, I think it's always just helpful in terms of that. And the final thing, I think once a month I do this. Go get a hardware wallet. Buy one. It takes, a week or two. I like Trezors. Ledgers are also awesome. You can download wallets off of any individual sites. GitHub, make sure it's the right one, onto a laptop or a computer or whatever. But just get your wallets get your coins off the exchanges into a secure wallet. Make it a habit. If you want, you can go to coinmastery.com/Trezor, Trezor. Get a Trezor. I think I get like 3% commission on that. So great. But more importantly is you have to own this stuff. These exchange hacks are not going to stop. Okay. It takes 20 minutes to take your coins off of an exchange and store them and be in control of it. You have to do this stuff. It's so, so, so important. And I'm going to keep talking about this because it seems like every week I wake up and I hear from friends who got ripped off, or they lost something, or the wallet on Bittrex isn't working and they can't send it their funds when they need to. And it's just like, you have to control this. You are your own bank. You got to do it. And if that scares you, start small, right? Buy a wallet and move 1% over to the wallet. Like, get used to the process. Then move another piece. You can slowly do it. It's just, you have to do this stuff. It's so important. All right. So with that, always good times. We're just going to keep an eye on this over the weekend, and we're going to rock and roll. Really excited about next few weeks. I think that we're going through a much needed phase, whatever you want to call it. And then I think the rest of 2018, after we get through this, is going to be showtime. I'm also going to start doing a video series about researching coins, especially about researching ICOs and things like that. It's something I've been spending a lot of time doing, and I figure it'll help you guys out a lot. So I'm just going to start documenting that process, share some of the stuff I'm doing with that. And so you can start to see that. Always keeping the daily shows, but maybe doing some videos that get published at night or something. It's just to keep adding for you guys. Cool. All right. Well, I hope you all have a great weekend, and I will see you on Monday. Peace out.